This episode is intended exclusively to provide information and education to help individuals better understand cycles. However, this information is not be construed as professional advice as to the buying and selling of securities or other investment instruments. In no event does the host express any opinion with respect to or make recommendations regarding the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading securities. Buying and selling decisions are solely within the personal discretion of each individual.
From the mind of Lars von Thienen, the most advanced psychoanalysis, hot off the press.
Welcome to another episode of Cycles TV. Yeah, today, another Monday, another time for psychoanalysis. Today, I want to review with you the gold and mining sector out there. We do this regularly, and I have a view on long-term and short-term cycles today on that perspective. So I will show you where we are in the long-time environment in gold and silver mining, and in particular we will jump to the short-term perspective, which also gives an interesting view, which might not be the same, but I think there is something for long-term and short-term perspectives if you are interested in that sector, that industry related to gold and silver. Let's get into it. I will review the basic procedure, how we analyze cycles here with our analysis method. So let's start with the weekly gold mining, GLD. That's the ETF we are analyzing here. What we currently see is the chart on the weekly perspective. So from a long-term perspective, we had a long run up in gold and gold mining. And just short-term, we saw this pullback here, but we need first to check where we are in that long-term perspective. We do that by looking at the bottom on the spectrum chart, which we see here. And what is first popping up into our mind is that there is one dominant peak at the length of 232 weeks, which is a quite long-term cycle over 230 weeks. And we can see here to the left, that's obvious to pick this cycle here to the left. There could be even a much longer cycle here around 385, but this is what I would call a too flat plateau. That's a very flat peak here, so I would not use that one here because we don't really know when the top is on that plateau. While here we have a nice right shoulder and left shoulder of that swing. And so it's kind of obvious to pick this one here. If you check the table here, we see it's ranked number 1 also in the table. Good strength, a Bartel score. So that's from a longer term perspective. There are only quite shorter cycles here. So that's the obvious to go. So let's zoom in. Let's check that cycle. So we see here we are nearing that major top here, which is projected around May 2025. From the rhythm we see in that cycle here, it has quite a nice fit. I would also remind you on what we discussed in the last episodes on this is a detrended cycle analysis, and this is a time-based analysis. So what you always need to have in mind that those swings which you see here, they do not represent price projections. They represent changes in trend at that given point in time, which should show us here we expect at that timing point a reversal from upwards to downwards, and that's exactly this top we see here. So that's the timing. As we see here, a turn in that gold index, even though it does not mean price will move as high as that. So I always try to visualize that by building this kind of zigzag. So here at the top, then going down into this bottom here, and then we move at that top here. And then you see here's exactly, that's the low aligned with that cyclic low here, which we can connect, and then we have the next top appear here at that point in time. So here we had the top, and then you see here it's quite nice aligned with this bottom and that cyclic bottom here. So that's how you read those cycle swings, yeah? So you see in terms of timing the gold mining, that cycle worked for the past 12 to 13 years. We have 3, almost 4 completed iterations, and all legs to the left or the right, so the downswing and the upswing would become interesting here. So that's why I think this long-term cycle is important, is dominant, is present in the data. So from a long-term perspective, we are watching here for a major change in trend, or if we stay in this long upward phase. So you also see what happens as we approached the last downswing from the timing perspective here. So this was the last downswing period of this long-term cycle, which is kind of around the corner. So in the previous time when we have been at that downward move, gold or the gold mining just did a sideways move, yeah, to regarding to price. So it was not a real correction. We stayed in this long-term upward trend. So the downward phase, yeah, which is just coming, will then maybe just pause the next upswing. So this is what could also be a pattern. So not really a correction in the gold prices, maybe just a sideways movement of the gold prices then for the next 2 years, as we had a similar situation here from 2020 to 2023. So it's maybe waiting for the next up leg to start. But what we also need to take into account, we are not quite there. So there might be room for another upswing or continuation of that upswing here. And to get a better clue on the fine-tuning on that, we anyhow need to go on the shorter term in the daily time frame. This is just the larger perspective we need to take into account. So that's the weekly. So now let's move to the daily, which is then obviously the next shorter time frame we're interested in. So here we see the daily gold mining. So we stay at the gold mining industry, and we can see here that's the correction now we have seen from 260 now down to 10% correction. So on the short term, I mean long term, it's quite a nice up move here, 2023, 2024. If we look at the spectrum here, in that case, we need to be careful here with this longer term cycle. We need to put an eye on, but the left shoulder here is not as nice. So, but there is another peak, which at least for me is quite interesting. It's this one here, 104 days. I mean, that stands out. You see to the left, there is no similar cycle, and it's quite a sharp peak in that spectrum. If we look into the table view at the right, we see 104 is also listed here as the most dominant cycle. Then 93, so this is the second one here. Yeah, but I would start with the 104, maybe then at this longer term cycle, 329 days. So let's see. Let's start with the 104 first. And this is what I meant, as we might see a different perspective here on the daily view. So first, that cycle also has a nice correlation in regards to timing ups and downs in gold over the past period. And now this cycle is bottoming and might suggest another up leg around the corner into early 2025. So that's now the fine-tuning which we really need to do. We could now check if we have a different view. Let's add this 93 days, so which is this second cycle here. Let's add that one as a kind of composite and see if we have a shift. Yeah, you see the obvious, which I would expect. So it does not really matter if you pick both or just one of those two cycles here. So now it does not even look like a composite, but this is a composite out of two cycles. You only will see it once I zoom out a lot here, it looks like just one cycle here, which at some time they cancel out each other, and another time they just add up to each other at that length. So it's just interesting here. But what we're looking for is the next important turning point in regards to time. So that's the composite, which is from now projecting an upswing, the composite of both cycles. Let's now just use the 104. You see it does not really alter the projection into February, or even let's just use the 93 days. It's the same. So it doesn't really matter if you pick 93, 104, or both of them. They give you the same projection, which is quite good. So it would be a different perspective if those two cycles would give us completely different projections. So, but in that case, those two cycles just give the same. So the only topic we now need to add in addition is this long-term cycle, 329 days. That one here, even though it's not a perfect one, but let's see. Or let's just first see that long-term cycle here on its own. So this is now a downward projection into March 2025. So they don't completely agree, or they disagree, like telling it that way. But if you now add all three cycles into a kind of composite, you see here there's still an outstanding interim upswing phase now shown into early 2025. And you might remember, if you have a look at the weekly chart, we still expect the overall top to arrive early here April 2025. And as I said, there is still some room or some time to go on the weekly until March, April, until we arrive at the top, which would be in alignment with the daily view here, that there might be still one up leg left on the daily cycles. And at that point here, somewhere end January, February, so at that point in time, this is where the weekly and the daily cycles come into alignment. So after February next year, the weekly and the daily project a downward movement. But into February next year, so the next 2 months, there could be another upswing in gold. Finally, we need to put in on the technicals here. So we use the length information from those cycles now to fine-tune the technical indicator. Let's do this with the 104. Let's activate that cycle. And this is, let's make this even quite larger here. So this is what is also kind of confirmed. So the technical indication shows us here we have triggered a possible long entry here back in November, so end of November, which has now also from a time-based view here now moved to the upside. So now the technical signal, which came in late November, is now being confirmed by the timing of the cycle moving upward. And from the technical condition, we would have time now that this indicator also moves up into early 2025, then maybe turn around at that timing point here, and then the daily and the weekly come into alignment. So long story short, what I want to tell here is, from a short-term perspective, there's some room for another upswing, while longer term, watch out for maybe a major shift or just a sideways movement, which could last a little bit longer. Let's now, at the silver perspective, as gold and silver are anyhow highly correlated, but now we switch to the silver ETF. I'm using the juniors in that case, because the juniors have a much cleaner view on silver. Otherwise, it's anyhow mixed between gold and silver. So silver junior ETF, just to give this perspective now. So let's do the same procedure on the silver mining ETF, the juniors, which is here the weekly ETF. Let's start with the weekly perspective. Here it's quite interesting to see on the spectrum that, I mean, here for sure it's obvious, 213 weeks, that's the most obvious cycle. And to the right, I mean, that's quite perfect that you see this even go down close to zero. Yeah, so the right shoulder and the left shoulder is really moving down to the start of that axis here, which is an indication that this is an important cycle here. If you have that clean separation to the left and to the right, and the threshold offset here from the amplitude is also quite high. So there's also a separation from the amplitude, yeah, to the next lower cycles, which would kick in here on that level here. So that's an interesting view. And I mean, this cycle could maybe even be spotted just visually on the chart. That's quite interesting. So there's, I think, no discussion that this is the most obvious here. Let's compare this now first, as this is the weekly perspective. Maybe you have it in mind, but let's switch now to the gold weekly. Here, remember, we have still an outstanding upswing into May 2025, yeah, for that timing, and gold weekly was quite similar. So that's the first, even though the weekly had a length of 232 weeks, while silver juniors had 213 weeks. But I would count this the same nominal cycle, around 220 weeks plus minus. So you can spot both cycles in the silver juniors and the gold mining. Let's also bring in the technicals here on that chart, and you might see it's quite at that topping position. But as said, so we now need to closely monitor this topping window here, and there might be some room. So this would be a very early left translated top from that cycle here. As said, let's now move to the daily. So similar procedure with the silver juniors. Here, that's the daily chart of the silver juniors here. We see the spectrum at the bottom. And here, what's interesting, it's quite interesting. We find similar cycles as we did in the gold daily. Yeah, so 90 days and 106. And I think in gold, it has gold daily. Gold, it has been 104 and 93. So we can identify the same short-term cycles in that data series, while it's quite looking really different here. So we have been coming down here from 15, around 11. Now that's quite a correction, about even 20 to 30% here on that asset. So now here at that low. So using those two, or again, doing the same procedure here. So here we also see the 90-day cycle and upswing projection into January next year. That's at the 106 days. Yeah, similar perspective. You see, I mean, again, yeah, these are two cycles, but the composite still looks as a single cycle. So same principle here. And this is how you use a forecast. Maybe I need to add this here or slow down a little bit. The way how to read that kind of cycle is you should never ever treat this static projection now here as a forecast into even 2026. Yeah, I mean, the cycles can easily be plotted into whatever future you have in mind, but the way you use that kind of cycle analysis, only look for the next possible turning point in regards to timing. Latest at that point in time, while you approach that point in time, you need to revise and update your analysis anyhow. So such kind of long-term projection is just for theory. It has no real value. Only look out for this point in time here. So, or even the next 2 points. So we are approaching a bottom here, moving up into January. Everything else, what might be shown on the time axis here is useless. It's just theory. There are no static cycles. So that's why I, in most cases, just zoom in to the next turning points. And now we compare, and that's the second, again, slow down. That's the second key rule of our framework here. If you're not quite sure which is the most dominant cycle, so is it 106 days, is it 90 days? Yeah, I've shown you in the spectrum there would have been 2 possible options you could choose from. And if you have that kind of 2 options, what you are doing is you switch on one, the other, or even both in a composite, and then you check if this would alter or change your timing window in the future. If not, you have a good chance that it wouldn't matter anyhow which you pick, one, the other, or all 3. If it changes your outlook, you're not in a good situation, because then you are confronted with conflicting cycles, which also happens. So, and maybe then you should not use cycles if they give you diverging analysis. If you give you the same timing, then you're in good shape. So that's why I did this here on the chart. So let's start with the 106. I just mark it from a visual perspective. That's the timing window we are watching out for a possible top here. That's the timing window for a bottom. And now I validate if that timing would change if I switch from 106, which is this one here, to the other one, to the 90-day cycle. So let's use the 90. Let's deactivate the 106. Here in that case, it switches to the left. So, but again, from that point in time, we're still in an upswing cycle. So that window here, let's from here to here. So that timing, we have the same upswing procedure. If I add both, it's quite shifted here. So they are not as similar as we have seen it in gold, but they both project, and that's the average here if you bring both together, into early February 2025. We have this Langer here, which is the same we had in gold, through 310 at 12 days. That's then the overall longer perspective here. So that's the same. So the long-term cycles also still suggest a downward correction, but that's the conflicting perspective you have. If you stack up all 3, we are still interested in a shift now from a longer downward phase here, which we have seen in price now coming down. So this is what price did during this timing. Now expecting from a short-term perspective, at least into early 2025, so the next 2 to 3 months, a possible upswing timing condition just using time-based cycles. And now let's do the same. Let's add in the technical situation, and that's similar to what we've seen in gold, is also confirming here now it has triggered a possible upswing from the technicals and now the timing here, moving into early 2025. And this is what I wanted to show you on both silver and gold mining ETFs. Both show us more or less the same picture. So long term, we are waiting, or we are close to a major top on the weekly cycle, which is due to top around April, May next year, which in that sense means there is some room to the upside from timing-wise. These are not price projections. So the short-term cycles on the daily have now rolled over into another positive leg early next year, which is supported by the technical cyclic RSI condition. So I think that's the summary for that sector, which now you need to do your own due diligence and your analysis, what you derive from that. The main purpose, as always, was to show how we use cycles for timing And then we add up technical indicators. We compare if those cycles are also visible in correlated assets like gold and silver. If one or the second ranked dominant cycle agree in regards to timing. So testing out if you have similar time-based projections. And then finally see if those even agree from these two asset classes, give you a kind of similar timing. And that's the case, and that's the main purpose, what I try to do here, and what is the basic framework and the basic procedure we always apply to cycles. Gold and silver was today just an example, as we have some interesting facts and figures out there. That's for the analysis. Now switching over to your questions. I see in the chat there are already some questions coming in. Let me pick up some of your questions. And yeah, let's start with that question. It's related to the early analysis of Gold Weekly, right? Yeah. So the Gold Weekly, I mentioned that there is these 385 weeks, which is here to the right, which in that case, I'm not confident to pick that one because it's a very flat plateau. But a rule or way to validate if the 385 week cycle might be interesting is exactly what you brought in here. Might the 385 cycle become better pronounced if you did add at least more data? So 3 multiplied by the length, so would means we would add 1,200 data points. In that case, yeah, the standard setting we just use 850. So let's test and see that how the spectrum would change. Let's maybe. Okay, that's the most data we can get. Let's then use all that information. This is 1,000 data points. And you see, no, it's more, it looks like it's shifting to the right. So that cycle is even becoming longer. Or we need to have even more data. But for the GLD ETF, it looks like we won't get more data and won't have more before 24 as seen here. But your question and the way how to validate that is right. But you see, if we even add up to 1,000 data points, that cycle even shifts to the right, so out of that spectrum. So it seems to be even longer than 385 as it disappeared now from that spectrum, which from our perspective just give me kind of confidence not to use that right now. But right procedure to validate it. You might help me on XPT. I don't have in mind right now what this refers to. Please put it in the chat, Jason. I can come back to that maybe in some minutes. If you, I just don't have it at hand right now. Okay, thanks for at least sharing your perspective here with the Elliott wave 4 at the moment. But that's the Elliott wave theory, which is, I mean, if you can bring it in alignment with cycles, it's a good combination of both. Yeah, Smiles are good. You are related to the pattern on the daily. Let's get back to that pattern, which I also find interesting, and your question is referencing that. So if I zoom out a little bit, and I think that's the pattern you mentioned. So if we have those 2 daily cycles, it is quite at some point in time, yeah, they really get narrow or they cancel out each other, so that cycle is not as important. And at some point in time, they aggregate or amplify each other so that the amplitude gets very high. And this is an alternating pattern. So it seems like that cycle is breathing or it's modulated even on a longer term cycle, which shows you when that cycle is active and when that cycle is inactive. Yeah, the way I would read it, smiles are good, and that's your question. I read that if we see that pattern when that amplitude comes very high, so around this timing here, then this cycle becomes important. Because here you see if it has a high amplitude, it seems to have a huge influence on price swings. So the strength of that cycle is important in that timing windows here. While for example, during those times here, I would not judge on that cycle because the overall amplitude is quite dimmed or limited. So it's not significant, or it's not significant in regards to the price impact here. But this relates to the upside and to the downside. But when it has these high swings, as it has right now, so it's more or less in the highest phase here. So we had the downswing, then the huge to the upside. Here this was also huge to the upside. Huge to the upside. So you see it? So at the previous time, once these swings become very high, so the underlying, and remember, from the weekly perspective, this whole period is in a weekly upswing phase. So the daily upswing really amplified those timings to the upside, while the downward cycle on the daily, while in the weekly upswing, even gave just a short downward phase. But when you have the daily amplified in the long-term upturn swing, then we see this huge up move. And that's what I said, another leg is just waiting to come in now. So if it has the similar strength as we've seen from summer to November, this is maybe what you can expect. But smiles are good. This is how I would use it during those times when we see this huge amplitude. It gives me more support to using these cycles, while even if you look into 2026, it becomes dimmed again. I would not use it, even though I said that's a static forecast. You need to redo the analysis anyhow at that point in time. All right. And Marco, yes, thanks for again bringing that up. Is it possible to say that as long as the trend indicators do not change, a downward cyclical phase results in a sideways? Yes, that's my current assumption. So that's what we saw already in that short downward swing here from when October now to early December. Again, that it was a huge downward swing here, but it has just been very, very sideways movement here. So exactly this is what I would expect now. Again, if the next upswing starts to come around the corner. So, yeah, thanks Franz. Thanks Jason for bringing in also your perspective on those asset class. So that's interesting also to share your view here. Smiles are good. And that's the way I want to run those sessions. So that's the chance to bring in your question. That's why I'm here live. And this is why I also like to have a quick chat with you here. So that's it for today. You've seen some new analysis on gold and silver. Let's see how it plays out. By the way, maybe I would wish you maybe driving home for Christmas out there now this week. So stay safe, travel safe if you are traveling back to your families at the end of the week. And then hopefully a nice Christmas time will start for us all starting next week. So, see you again, Cycles TV, next time, next view. Thank you for staying with me.